noticed that since about late 2014, stocks as represented by the S&P 500 have largely done nothing? And I hear a lot of people complain about this, but they're complaining about it without actually looking for reasons for it, for trying to explain what causes this issue. And now, the older I get, the more I can appreciate this philosophy that not everything in life has to be explained. But I think in the stock market, especially if we look at it through a multi-month, multi-quarter, multi-year lens, a lot of things can be explained. So let me go through a couple things here. I want to show you guys, give you some context by looking at specifically three things that I think are going to shed some light on why stocks are actually stuck in a range and what it's going to take for us to break out of this. Well, there's really only a couple of ways we can get out of sort of a growth malaise, and that's one, for growth to pick up, and two, maybe for some sort of stimulus. But I think we've had a lot of stimulus now over the past few years, so it's really growth that's lagging. So what we're going to look at here is the first chart here. This is the chart of the S&P 500 top line revenue growth for the companies in the S&P 500. And this is about 2010 here, so you can see the initial revenue growth coming out of the financial crisis, very strong. And ever since, the rate of change of top line growth has decelerated massively. And it's actually, I think, probably going negative right now. So that's the first chart. Maybe for context though, let me show you what the actual S&P 500 looks like. This is the S&P 500. You can see this is the very long secular bear market we had after stocks topped out in the year 2000, the internet bubble, so on and so forth. And then we broke higher here in 2013. But ever since basically this point right here, which was roughly late 2014, stocks have, for the most part, done very little to nothing. And it's very closely related to this problem right here, okay? The sales growth is not there, nor is neither top nor bottom line growth is anywhere where it needs to be. In fact, if you were to look at the industrial production for the U.S. economy for the month of September, so September 2016, it was actually down 1% year over year. So the rate of change in economic growth is very much to the negative side, and it's been the same thing for top line and bottom line earnings in the S&P 500. I know there's been a couple of outliers here, for example, August 2015, then January, February 2016. We had a little bit of a hiccup in June 2016, but for the most part, we are stuck. Yes, we had a breakout here, but if you look a little bit deeper underneath the surface, we're still not really going anywhere. We had like a 2-week breakout in July, and that was basically it. Now, the way to explain this, if we were to sort of take apart the S&P 500, you can see I have a bunch of squiggly lines here, and really what we're looking at here is the green line is the S&P 500, and the rest of these lines are representing a couple of different sectors of the S&P 500. So these are some of the outliers. All the other ones are basically right along with that green line. And basically what we have here is we have consumer discretionary stocks, we have consumer industrial stocks, and then we have technology, which is basically outperforming. What I'm trying to tell you is most sectors are actually looking quite weak relative to the S&P, but technology stocks, which have a very heavy weighting, I think it's like 20-ish% or so of the S&P 500, is actually tech. And large cap tech stocks like Google, like Microsoft, Facebook, those are all leading this market higher. If tech ever gives us a little bit back, then the S&P is going to come down quite significantly. Now, that's not my base case, but I'm trying to explain to you why stocks are essentially stuck. So I hope this helped shed a little bit of light on why stocks are stuck and what it's going to take for them to actually break higher. Basically, we need growth to pick up. It's that simple. Until growth picks up, it's going to be a choppy going with, I think, a tendency for further breakdowns and sharp snapbacks.